Imagine this, Mr. Rohan invested 5 lakh rupees in Bitcoin. No trading, no predictions, no Telegram groups, no YouTube gurus. He simply invested and waited. After 3 years, he finds that his 5 lakh rupees become 25 lakh rupees. There is a net profit of 20 lakh rupees. In today's video, we will understand how this 20 lakh rupees become only 13.76 lakh rupees. And also we will understand how the crypto is taxed in India, 1% TDS, loss set off, ITR filing, and foreign exchange related changes. In 2022, he invested rupees 5 lakh in Bitcoins. Now, unlike many investors, Rohan was not checking price constantly. He wasn't panic selling. He simply stayed invested. And sometimes investing requires more patience than intelligence. Let's have a look at the journey of Mr. Rohan. Initially, he invested rupees 5 lakh in Bitcoins, but it doesn't go well. His 5 lakh become 3.5 lakh rupees, but things improved. This 3.5 lakh become 5.5 lakh, then 7 lakh, then 11 lakh, then 18 lakh, and finally it's become 25 lakh rupees. Now imagine you are Rohan. You initially invested rupees 5 lakh rupees. Now it become rupees 25 lakh rupees. Net profit of rupees 20 lakh rupees. Your mind starts spending the profit. You can buy a luxury car. You can plan a family vacation. You can prepay your home loan. The income tax department is not concerned about your excitement. The department is interested in one question: how much taxable income arises from this transaction? The investor sees profit, the department sees taxable income, and those two numbers can have very, very different consequences. Before discussing tax, we need to understand what the law calls these assets. Interestingly, the income tax department does not use term crypto. The department uses term virtual digital assets or VDA. Bitcoin, yes, this is a VDA. Ethereum, this is also a VDA. NFT, this is also VDA. For many professional audience, this comes under section 247A of the Income Tax Act, where the virtual digital assets are defined. For people often ask, if I buy Bitcoin, do I have to pay taxes? Generally, merely purchasing and holding crypto does not trigger taxes. But if you sell crypto or Bitcoins, in that case, tax implications are there. If you swap your Bitcoin with Ethereum, tax implication arises. If you sell your NFTs, yes, there's a tax implications. Now let's return to Rohan. He sold Bitcoin for 25 lakh rupees. His cost was 5 lakh rupees. So there's a net profit of 20 lakh rupees. Now Rohan made another assumption. Since his income was not that much high, so he was falling under 20% tax slab, income tax slab. He calculated his tax 20 lakh rupees profit and 20% tax rate. So the normal profit which he calculated is 4 lakh rupees. But this is totally wrong. This is where most crypto investors get surprised. Crypto profits are not taxed as per normal tax slab. Income tax have special regime for virtual digital assets. They are charged very, very differently. Friend, this is the slide which shocked Rohan more than any market crash. Section 115 BBH have special regime for virtual digital asset taxation. The headline rule is 30%. Whether you are earning 1000 rupees or 1 crore rupees, the tax rate is 30% straight. If we add health and education sales, then this rate becomes 31.2%. Now let's check Rohan's actual tax bill. He sold the virtual assets or crypto for 25 lakh rupees, and the cost of buying these are 5 lakh. Now he has net profit of 20 lakh rupees. We apply simple 30% tax rate on that and it's become 6 lakh rupees tax. If we add education and health cess of 4%, which is 24,000 rupees, then the actual tax bill will become 6 lakh 24,000, which is far more than what he actually thinks. Let's look at the picture differently. Most people thinks that they earn 20 lakh rupees, but in actual, in your pocket, you are earning only 13.76 lakh rupees, where most of the investors get surprised. One transaction and three perspective. Investor says, I earned 20 lakh rupees. Income tax department thinks taxable income of 20 lakh arises. And CA says section 115 BBH applies and schedule VDA of ITR needs to be reported. So one transaction but three different perspectives. Now let's make the story more interesting. Rohan earned 20 lakh rupees in Bitcoin, but unfortunately he also invested in Ethereum and lost 15 lakh rupees. So as per Rohan's logic, he earned 5 lakh rupees. 20 lakh rupees he earned in Bitcoins, but he lost 15 lakh rupees in Ethereum. So the net profit is 5 lakh rupees. But the department doesn't agree with the logic of investor. Now, how should you report your crypto transactions in your income tax return? This is the big question which comes to the mind of every investor. So let us check how it should be reported. So you have to check the correct form. You should have transaction level details. You should have your AIS details. You should have your 26AS details. Platforms such as Bitcoin, Coinbase and Kraken are extremely popular. However, foreign exchange creates additional compliances consideration. For example, TDS may not automatically be deducted. Currency conversion records become important. Banking trails become more important. And depending on the facts, FEMA and overseas remittance consideration may also need evaluation. This doesn't mean investors should panic. It simply means documentation become more and more important now. The investor think that government doesn't know, but in actual government knows everything through your TDS, through your banking trails, through your AIS and through your ITR disclosures. If I make an illustration how reportings are changed or how the transparency is changed or how the government have information about your crypto transactions. So if we go with 2018 to 23-24, things are changed. In 24-25, things are more changed. Now we are expecting a more clear transparency in your crypto transaction. So be ready, keep your documents ready for all these transparency transactions. If Bitcoin may be decentralized, but taxation is not. Your tax rate is 30%. ITR forms you have to file. TDS is still there, but there's a more transparency. So you have to keep your documents very much ready for any compliance related or any scrutiny related notices. Let's go back to Rohan. He thought he made 20 lakh rupees. In reality, taxes reduce their profit significantly. The lesson is not that crypto is bad. The lesson is not that investing is bad. The lesson is that taxation is part of your investing. Because the smartest investor don't chase for return. They also plan for taxes. Thank you for watching my video. If you have any question, then you can DM me or you can comment on YouTube video. I will personally reply on that video.